Good evening. Welcome, everyone. Hope everyone had the most amazing weekend ever. I know I did. And it's always great to get back to work. And I'm sure everyone loves getting back to work as much as I do on Mondays, because Mondays are literally the best day of the week. And they're only the best until you get to Tuesday, which is only the best until you get to Wednesday. And you see where I'm going with this, right? Cool. So let's let everyone get in. Come in. Welcome. I'm going to move this screen a little bit. I feel like it looks like I'm in like a corner somewhere, but I'm not. Might as well look at my office, right? All right, so come in. Welcome, everyone. And very cool. So we'll give it a minute. Why not? It's Monday. Listen to a little music, we'll relax a little bit, nice. Yeah, so our group is quite punctual, right? The majority usually are in by 8:03. And then I'll start speaking. And then about 20-25 minutes into it, I'll take a look at the count. And I see that out of nowhere, like another 100 people just showed up. And that's great, right? Anyone that shows up is a good thing. But I really would like everyone to show up at once. That would be kind of cool. So if you guys could forgive me, I'm going to allow it one more minute. And then we'll get into some things, right? We have a lot of good updates. A lot of good stuff is happening. In fact, we're ahead of numbers, which is actually a little anxious, because like when I'm doing our numbers and I start seeing the projections get to like cartoon numbers, like really high, like a coin's worth $1 million. I understand why it would be worth that much. And I actually agree with it, but I'm always nervous about offering a number. I call it a cartoon number, because it then comes off as, oh, that's too good to be true. And I'm never going to lie about the numbers, right? Like I'm not going to manipulate them to look worse, because it's a sheet. Yeah. So it's a sheet that's given to the entire globe. Everyone has access to it. Everyone clicks it all the time. I see clicks from Russia to this place, to that place, all on our balance sheet all day. So I'm not going to go ahead and lie about the numbers to understate them, because you know what happens when that happens? Somebody comes down and says, oh, we found a discrepancy, and then nothing can be trusted anymore. So because if we're going to go ahead and be completely transparent, we have to allow the numbers to be what they are. But the point of the story is, when I was doing them earlier and updating them, I see that we're far exceeding our expectations on a 4-week basis, right? Like it's 112 weeks, but at the 4-week mark, we're exceeding our expectations, which means the numbers are starting to look like a cartoon. That being said, don't invite your friend next week, right? All right, so we sent out an email this morning, and we allowed it to be a little bit more, how do you say, a little bit more oomph, right? And I actually wrote down some of the numbers. Let's see if I get to it. Now, a little bit of background on me. Everyone knows everyone kind of knows my background, right? But there is a part of my background that I'd like to put a little more color on. When I was in a past life, I used to work on Wall Street, right? I worked at a pretty good investment banking firm. It's one that you would know, so I'm not going to share it. Amongst people that you would actually know, right? Like names that you might know. And I was a pretty smart person, right? Like I consider myself fairly smart. And this was in 2007. Now, if you remember 2008, the whole market crashed, right? So in 2007, I took a real interest. Well, I always take a look at the numbers. And of course, everyone that has our balance sheet knows this exactly, right? And anyone that doesn't, distributivemarketing.com, we'll pull it up for you. In fact, stay with us, we'll get to it. And the thing was, you had home prices moving really like high. And that's not a sentence that means anything. Okay, they're moving high. High compared to what? Relative to what? How high can they go? Are they too high compared to where they're going? Like, what does they went high mean, right? but it caught my attention because they kept moving up. And then you start hearing people talk, right? Then you hear your cab driver, because they didn't have Uber back then. Your cab driver owns 3 homes in Florida because each one of them appreciates $10,000 per month. And he's opening up a business flipping these homes. And he's doing quite well. And you're like, okay, cool. Like, cab drivers could do good. Why not? Like, I'm not going to say my cab driver can't do well. And then, like, your pizza delivery man is owning 3 homes in Massachusetts, or he's buying the pre-condos in Las Vegas because it's going to be the Manhattanization of Las Vegas. And you start saying to yourself, you know, I'm a really nice guy, right? Like, I believe anyone could do anything. But my cab driver is my cab driver because he's my cab driver. Like, when you drive a cab, it's a most notable profession, right? Noble. You work your tail off. You have to deal with so many personalities, and you're in charge of keeping everyone safe. I have nothing bad to say about a cab driver. 0. But do I think a cab driver is a cab driver because he's selected to be a cab driver, that he said his goal was at 50 years old, he wants to be a cab driver? I don't. I do not think that's the case. Therefore, if I see a 40 to 50-year-old cab driver, I think of a couple of things. 1, the individual needs money. 2, the individual is not qualified to do anything else, and this is the best thing he could do. 3, it's a side hustle. He wants to save up for something, and he's driving a cab to get easy, quick cash. Or 4, he's a psychopath, serial killer, molester, right? Like, I don't know what other things could be for like a 40-year-old cab driver. Those are my 4. Now, if there's someone that has 1,000 different jobs and they're just working side hustles because they could save money so they could build their business, cool, love them. But that's not the majority of them. And the ones that are the serial killers, how would you ever know, right? Like, by the time you find out, it's usually too late. Anyway, so the first and the second ones are usually the case, right? They're either unqualified to do anything else, or they've been doing this forever, right? So one of the two. So when that person all of a sudden owns 3 homes in Florida, when he's a cab driver in New York City, or a cab driver actually in Staten Island, New York, it's a little bit of a pause. Okay, maybe that one person's just really good. Cool. But when it becomes a common theme, and then when your grocer is a homeowner, and when your stripper is a homeowner, and they're saying things like Manhattanization of Las Vegas, guys, you could call it whatever you want. It's a desert. There's nothing there except for casinos. That's it. Without the casinos, you'd never go to Las Vegas. So there is no Manhattanization of Las Vegas. So it caught my attention, right? The home prices are going really high, and these people, and I say these people because they're the people that have not been successful their entire life, and one did not think they were going to start becoming successful at 50 years old, nor did anyone think that they were going to promote themselves from pizza delivery boy to real estate tycoon, okay? So it catches my attention. So I start taking a look at the numbers, and you see home prices going up, and you see median income going up, right? Now, why is median income important? Well, because if you live in a home, like when you own a home, you have to be able to afford the home. You live in the home. It's not like gold prices, right? Like gold prices go up and people are like, wow, that gold is too high. Well, not really. Someone's always going to buy it, and you don't always have to own it. You do not need gold to live. You do need shelter to live. Either you own a home or you rent a home. Either way, the home prices directly affect you. But more so than that, the home prices have to be supported by how much money you have. Because if you can't afford the home, what happens to it? It's on a piece of real estate. You can't just be like, up and there's those homes no one could afford. They're just left empty. No, the home prices come down so people can afford to live in it. Because when a home is just sitting in one spot, it's a dead asset, right? Somebody owns the land, somebody owns the mortgage. The home price will always reflect median income. Okay, so being the smart person that I am, I said, all right, let's take a look at a chart. What's the median home price versus the median income in the US? And what you would find is over the course of 100 years, it was 1.8 to 2.4. That was the deviation, right? Like 0.3 up and down. In 2007, it was 5. And then it was like 7. Yeah, no, totally cool. Derek, I'm going to read that whole thing. I got a little bit of it and I'm flattered, I think. But I'll lose my story, right? So I will read that. So in 2007, it was like 5, and then it went to 7. And the point is, when you're, I don't know, 5 deviations past what the norm has been for the last 100 years, that's when that word high is relative. It's a little too high. It's way too high. People cannot afford to buy the homes. And since people have to be able to afford to buy the homes, then the home prices have to come down. Okay, cool. So why were home prices so high? Well, the mortgages were guaranteed. Because after 9/11, George Bush came out and said, listen, we're going to promote the American dream. We're going to create Fannie and Freddie and Ginnie, and they're going to go ahead and guarantee the homes of low-income people. And we want to really juice up the American dream, which is cool. After 9/11, that was a really, really bad time to go ahead and let the nation know you want to go ahead and make sure that they all own homes. That's awesome. I'm cool with that. But then you have this thing called Wall Street. Now, I'm telling you a story about me working on Wall Street. In the same breath, I'm going to tell you really bad things about Wall Street. And you could say, oh, Ant, you're a hypocrite. You worked on Wall Street and you're saying bad things about Wall Street. Or if you could put 2 thoughts together, you could say, oh, you're able to say these things because you were there and you know what they do. Like, it really upsets me when someone goes, oh, you're speaking from both sides of your mouth. You say bad things about Wall Street, but you worked on Wall Street. Well, how else can you say bad things about something if you had never been there before? But I believe it's in this culture, anyone could just say whatever they want. And it's just like, anyway, story for another day. So Wall Street's actually quite beautiful, right? Just threw your curveball there. Wall Street's actually quite beautiful. They are a pack of savage animals that only know how to do one thing: make money. They live, breathe, eat, sleep, money. They don't even need to eat. They do cocaine. They don't need a wife. They have hookers. They only care about money. In fact, when they're having sex, they're thinking about money. And when you go to a strip club on Wall Street, it's not because you're paying for it. It's because your clients are paying for it. Or it's because the investment banker that wants to take you out is paying for it. And every girl is on the roll, right? The point about what I'm saying about Wall Street is it is the most vile, disgusting place, but it really is quite true to what it is. It's actually beautiful in the simplicity of what it is. Just a savage animal that wants to make money. It does not care about clients. It does not care about anything. It does not care about your money. It does not care about anything other than making money. And so much so that in the attempts to make money, it will constantly blow itself up because it only cares about making money. It doesn't even care about safety. That's why you have government regulations to say, whoa, guys, we get it. Like, you're just a pack of savage animals. We have to put regulation on you. Okay, fine. So what does Wall Street do? We don't like regulation. Let's go ahead and buy that congressman. Let's buy that congressman. Let's buy that congressman. And they usually do. And then something bad happens, right? Because each time it gets progressively larger because the previous blow up caused them to buy those people. What do I mean? In 1997, you had something called the LTCM, the Long-Term Capital Management Crisis. Now, that was a hedge fund I thought they were really smart. Like, they were investing in all these different bonds overseas, and they had the first algorithms that were trading things, and it was cool, and the hedge fund blew up. The problem was the hedge fund was levered because certain banks thought they were really, really great and were giving them extra money. Okay, yeah, you lost a couple of dollars, $100 million, right? But we know you're really smart. In fact, you're so smart, we're going to take this as an opportunity. You're down 100 million. You need 100 million. Let us give it to you. Please, please, please let us give it to you. And just give us like 10% back on it. Okay, LTCM's like, hold my beer. Love that. Totally cool. So they go ahead and take the money. Then they lost that. Then another bank's like, oh my God, this is my lucky day. This is the best day of my life. I can't wait to give you money too. Please, 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 please. And they're like, seriously? This is like the biggest joke. Yeah, sure. Yeah, give me the money. So they start taking on more leverage and they start taking on more risk, because when you lose money, you want to make it back. And the way you make it back is by taking a higher level of risk, because if you have $100 and you go down to 50, you lost 50% of your money. To go from $50 up to 100, to make that 50 back, you have to make 100% on your money, which means now you're taking twice the level of risk that you were taking when you lost the money, which it doesn't sound like it's going to end well. Well, it doesn't. It never does. Have you ever seen someone that lost money gambling? What do? Oh, all right, I'll just double down, double down, double down. Yeah, that story works out like maybe one time. The rest ends up with divorced families and like drug addicts, right? So welcome to LTCM. So eventually they just blew up. Like there was no more money. Everything was gone. They completely got wiped off the face of the planet. Well, what happened to those banks that were like, oh my God, we lent them like hundreds of millions of dollars. That's not even our money. We're a bank. We use fractional reserve banking, which means we can lend out 10-to-1 based on our depositors. Well, we just took our depositors' money and just gave it to this bank that blew up. In fact, now we're not even hitting our regulation levels. We have to have a certain amount of money on balance. What do? No worries. Yo, Federal Reserve. Yeah, it happened again. We need to get bailed out. Oh, you don't want to bail us out? Oh, well, that's interesting. Well, if you don't bail us out, we're going to go ahead and take down the financial system. Oh, you don't think we can? Well, you know, we have bonds that are from this company and this company and this bank in this country, right? Oh, you want to bail us out now? Oh, cool. Yeah. I'll talk to you later. Bye. That's how that call happens. Now, if you go back to Andrew Jackson in like the 1800s, Andrew Jackson said to, I think it was called the first bank of the US. It was the first bank of the US. They lost their charter. The second bank of the US lost their charter. Federal Reserve Bank. It's all the same people. They just kept changing their names. And they did the same thing to him. And he goes, whoa, 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 guys, listen. If 1 million people lose their job because of you guys, that's your sin. But if I bail you out, 1 billion people are going to lose their job, and that's my sin. You're a den of vipers. And he removed their charter. Like, people forget this stuff. The Federal Reserve has lost their charter twice before. They're a bunch of dirtbags. They're not even a bank that's owned by the US. They have private stockholders that somehow got permission to make interest rate policy in accordance with the Treasury Department, who actually prints the money. Anyways, so because our president back then, who was Bill Clinton, Bill Clinton was a little busy doing other stuff, right? He didn't have the cojones to stand up to the banks like that. So he said, okay, hey, everything's going great. No problem. Money, 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 because the economy was doing pretty good in 1990s. In fact, everyone credits it to Bill Clinton, but there was this thing invented called the internet, and they did pretty good, right? So whatever, that crisis went away. Then you got to 2000, the tech bubble. Now everyone lost all their money in tech stocks because what did they do after LTCM? They got bailed out and they said, all right, if the banks are going to bail us out, let's go take a little more risk. Like, what's going on out there? Oh, tech invented the internet. Cool. Let's just buy those stocks. And because they were doing it, everyone in the country knew what was going on and they started buying it. So like the people that I was talking about, your cab drivers and your strippers and your pizza boys, they're all making a ton of money buying Cisco and AOL and all these different stocks. Fine. That goes up, that goes down. Everything crashes because they never should have got to those valuations. In fact, Amazon, I think, went down 90%. Amazon was one of the few companies that actually made it to what they are today. If you remember pets.com, like everything got crushed. But that's what Wall Street does. They have no problem getting you as excited as possible so they can continue offloading their SHIT to you. That's what they do, which is quite beautiful. They're very good at it. And every time it blows up, they always have someone to blame. And they always own Congress, because think about it. When you're in Congress, how do you win an election? It's about your election spend, right? How much money, how many ads can you put out? How many people are going to endorse you? If Wall Street goes ahead and calls their people over at AT&T, hey, listen, we're going to do an offering for you, but you got to go ahead and tell your unions, you got to tell your people that we're with Bill Clinton. That's the way Wall Street works. When you have all the money, you do whatever you want. So then the tech bubble pops. Okay. What also happened right after the tech bubble popped? 9/11. 9/11 happened. What happened? George Bush he was just sworn in 2000. This poor guy, and I know we can make funny jokes about George Bush, but like think about what he walked into, right? Obama I walked into no, Obama, you were running on that stuff. You knew what you were walking into. It wasn't a surprise to you. I'm not comparing the two, but Obama knew the economy he was walking into. George Bush had no clue. George Bush thought he was walking into the best economy. Then within a year, sees two towers go down and a whole stock market crash that everyone in the retail sector owned. That's a problem. And he was just doing like cocaine in Texas like a couple of years earlier. So anyway, so they go ahead and call the Federal Reserve, because now the president calls the Federal. Hey guys, listen, you know how you like bail out everyone all the time? Yeah, we won't remove your charter, Andrew Jackson. I need you to lower rates. And I'm going to do this thing. I'm going to tell everyone to buy a home. So I need you to keep rates low. Like, not only do you need to lower them, but you need to keep them there, because if I'm going to get all these people to buy homes and then I'm going to guarantee them, well, I can't have rates going up, because if rates go up, I have a real serious problem. These people can't afford them to begin with. Yeah. No, yeah. Yeah, okay. All right, bye. Cool. Everyone buy a home. So you saw the real estate sector go through the roof. Now, when you have that many years of what I call a moral hazard, where everyone believes everything's okay, what happens? You get blown up again, but you never know when the blowup's coming. But you could kind of start predicting it, which brings us back to the beginning of the story, where you were able to see the median house price and the median income in the country diverge. And a little bit of sense was like, wait a second, you could deal with certain things going crazy, but these people actually have to be able to afford those houses. This is the one metric that can't go crazy. This is the one metric that's the canary in the coal mine. This is everything. So what did I do? I was the least popular person in my whole entire office. I took short positions on every bank, on everything. So while the stock market's going up, there's me and all my clients sitting there crying every day, right? I would have my clients call me, Anthony, the stocks are making new highs and I'm losing money because I'm short these mortgage bonds and these CDs and the CLSs. I'm short all this and you're making me lose all this money. Why am I short Goldman Sachs? Why am I short Morgan Stanley? Why am I short Merrill Lynch? I was like, guys, hey, listen, calm down. I know what I'm doing here. And when we got into those positions, I said to everyone, listen, we're probably going to lose money for a period of time. But when we make this money, we're going to make more than you ever could have imagined. The people that believed me stuck with me. The people that didn't believe me, they eventually bailed out after I tried to hold their money hostage, right? Like, what can you really do? So the mortgage market blows up. And when you ask yourself, well, Ann, how did that divergence happen for so long? Because if people need to afford the houses and they weren't able to afford the houses, there's a part of the story, because you're not Nostradamus, you might be smart, but who was buying the houses? Well, nobody was. Well, people were buying the houses, nobody was living in the houses. Because the houses and the mortgages were guaranteed, you could buy the house, and then the mortgage lender would then take that piece of paper, the mortgage, and sell it off to the banks. The banks would then take that and go ahead and put it in investment products, right? And create funds of those mortgage securities. And they would stack them in such a way that these people that we all knew could never pay anything, and these people that could pay no matter what, let's just dice them up and put them together. Let's make a salad of them so you can never take them apart. And then let's take that and have the government guarantee it, because what does the government know? The rating agencies, we pay them. Have you ever tried to get an appraisal in 2007? Hey, I need an appraiser. Oh yeah, your house is worth $230. No, I think my house is worth $250. Well, I think it's $230. Well, I don't think I'm going to pay you for that appraisal. Boop. All right, listen, before we get this going, I need $250. If you don't do $250, I'm not paying you. Nah, I can't do just tell me the number you need, no problem, $250. All right, great, I'll sign off on it. You got to pick your own appraiser. The same thing with the rating agencies. You got to pick your own person that rated your bonds for you. So you have all this HIT that's rated AAA and it's being sent all over the globe, leveraged over and over again because it's guaranteed by the US government. The government stands behind it. And the banks, what did Wall Street do? You think Wall Street for any second was like, hey guys, this is getting a little crazy. I think we're selling people bad stuff. We should probably stop doing this. Yeah, we don't need to make money this month. Honestly, it's our investors, it's our clients. If they lost money, I don't know what I would do. How ridiculous that sounds? They don't care. They kept going and going and going and going until you get to a top. Now, how do you identify that top, right? How do you know when the music's about to stop? You could listen and you could hear. I don't hear any music right now. So where am I going with this? So the email I sent out this morning is exactly where we are right now. Because over the last X amount of years, I'm going to read that in a second. Over the last X amount of years, ever since you had COVID coming, you had them shut down an entire economy. Now, before COVID happened, you had this thing called digital marketing, right? E-commerce. And that was doing quite well. It was the biggest growth engine. And what did it require you to do? It required you to sit home and be able to use a computer to send out email marketing over here, to do Facebook, to do targeted ads over here, and then be able to drop shipping. I could sell this to you over there and automate the purchase order to go there. And then the fulfillment factory will send it there. Then the wholesale goes there. I get the profit over here, the taxes. It was all automated. So people were already getting rid of like HR departments, sales departments. You didn't need any of that because you're able to do it from the computer. But that was only the really, really smart people, the people that went to school for it, the people that wanted to learn from it. Because the people that are part of the old economy, like your senior citizens and your baby boomers and your older people, like I'm 35, even I had a bit of a learning curve to learn how to do all this stuff, and I'm really smart. But imagine everyone 40. It's a little bit unfair to say, okay, you are going to quit your job and now go do internet marketing. Yeah, get your pixel data from their Facebook, get over here. Oh, they banned your account. Sorry. Then go ahead and get a YouTube account, get the ad mail over here. Oh, that's okay. Sorry. That's like, what is that to anybody? So what COVID did, and so the economy was nice, right? You have your salespeople over here, you have your laborers over there, you have your industry over there, and you have your digital marketing e-commerce guys over here. Once COVID happened, once COVID happened, they shut the economy down. And rightfully so, right? Like when you have a nasty virus that has the potential, or at least the fear level, to kill everyone, you have to take the safety of people into account. Okay. After a couple of months, though, we kind of understood who the vulnerable population was. And we kind of probably could have made an offer and said, hey, listen, we kind of have a sense of what the vulnerable population is. Yeah, we're going to take precautions. But if you're like 20 years old and you're in good health, you could go bartend, right? Like let's allow some stuff to happen. You could go back to your office. Yeah, we're going to make sure that your desks are 10 feet apart or whatever. Like there were things you could have done to slowly rolled out. Now, again, Anthony, you're looking back in time. Back then, things were really, really bad. Okay, cool. Let's say something else then. At the beginning, where they made the decision, essential versus non-essential businesses, essential were deemed the really big companies, like your Targets, your Walmarts, your CVS's. And why were they essential? Because people had to go out and still buy stuff. They had to buy food. They had to buy product. Those were deemed the essential places. Okay. So I understand that. I'm not stupid. People need to go get food. Okay. People need to go buy like a lawnmower. Okay. People need to go buy paint for their house. What are they going to do? Okay, I get that. Why did it need to be Target though? Why did it need to be Walmart? Why couldn't it have been the local business in town that, if anything, if you're going to do contact tracing, could you have done better than a localized small business that has a localized community? Wouldn't the community be able to kind of self-regulate? Not only, all things being equal, essential and non-essential is the same exact thing. It's people going into a store and people getting in line and people breathing in a building, right? So like the mechanics of it are exactly the same. But you could even go so far to say in a small business, they're accountable to their community. they would say, hey guys, listen, we just heard that Mary got COVID and she was here yesterday and we saw her talking to Tommy. And guys, oh my God, did you hear she was talking to Tommy? Really? She's married to Mike. Yeah, we're not going to talk about that right now. You can make the argument that the essential businesses were really the small businesses. You can make the argument that the big businesses already have billions upon billions on their balance sheets, that they would have been fine. They were never going to go out of business. They didn't have that fear. The fear was in the small business that did go out of business. In fact, you can even make an argument further that you could look past the pandemic and say, okay, if we're going to put all the small businesses out of business, where are their employees going to go when we reopen? They're obviously not going to be able to reopen at the same pace the big businesses are. Anyone with a brain would have said, I see what's going on here. Because when you have all the money, you make all the decisions, right? So every step of the way, every single time the economy blew up, you had Wall Street and the rest be able to buy their influence, right? So your small business doesn't have a Wall Street broker. Your small business doesn't have an investment banker. Your small business isn't in retirement funds. Your small business isn't a stock that they're selling to their clients. So the hell with your small business. Not only the hell with your small business, but these big businesses, guess what they're able to do? They're able to grow their business now because they have no competition. Not only do they have no competition from your small business, but they literally have no competition anywhere. Everyone else is closed. They've been put out of business. So what do these big businesses do? They go ahead and say, okay, like we have no competition. All right, this is what we're gonna do. Let's lower prices. Yeah, I'll tell you why. Because if we can lower prices to a point, I know we're gonna lose a little bit of money, but like we have such volume, but we have all these new customers we want to keep for life. So let's lower prices so low that whenever those small businesses come back, they can't compete with us. Not only are we making billions, we have a beautiful bank account, but they can't compete with our pricing, so they'll go out of business. We have effectively stolen their customers. Okay, cool. Sounds fine. So what do all these big businesses do? They love Wall Street. They love Congress. They're the ones that gave them the right to do it. So what does Congress do on the other side? They're like, hey, you think you guys are the ones that are going to get rich? We're about to loot the nation too. We're going to, because we put small business out of business, everyone's unemployed. Well, we can't have them riot, right? Like you can't allow those people to riot and get unruly because they have the population. They'll kick us out of office. We got to make sure they stay home. We got to give them something. Okay. All right, COVID, lockdowns. You got to stay home. Can't go anywhere. It's bad out there. Oh, Lori Lightfoot of Chicago, I'm allowed to get my hair done because I'm a public figure. Oh, Nancy Pelosi, I'm allowed to get my hair done. I'm a public figure. Gavin Newsom, California, I'm allowed to go to parties. I'm a public figure. Obama, I'm allowed to have birthday parties. I'm a public figure. But you guys, no, you don't get it, silly. Your income is low, which means you're susceptible to COVID because the immunity for COVID is net worth. See, that's what none of you idiots know. Name one person on TV that died of COVID, right? None, but all your family did because when you don't have any money, you're dead. So you guys got to stay home. I know. I got to give you something. All right, we're going to give you enhanced unemployment. You're unemployed, but we're going to make it enhanced because you're unemployed, not because of you, but because of us. Okay. What's that come out to, like $1,000 a week? And now the whole nation's in a buzz. Oh my God, I'm making more than I ever did. I'm making $1,000 a week for free, sitting on my couch. Cool. Where did the real money go? Do you know $38,000 per US citizen, including your baby, was printed over the last 2 years? How much of it did you get? Let's add up all your enhanced unemployments. Maybe you got 10,000 if you were lucky. If you were one of the lucky ones, you got 10,000 more than you normally would have. You know what the majority of America got? They didn't really see that. Maybe someone got a little bit of PPP after Congress got theirs. Remember when stock exchange stocks companies were getting PPP? Oh, Deborah got 4,000. Nice. Okay, Well, 38,000 was printed for you. No, you're not silly. We printed it on your behalf because we're going to save you. See, the thing is, you're too, I don't want to say it, you're too stupid to know what to do with this money. We're the elites. We're Congress. We know what to do with this money. You don't know what to do with it. So we're going to take it on your behalf and we're going to spend it to make sure that you have a better life. Just trust us. Okay. So that's what they did. But here's the catch, right? So we're going to spend it on your behalf, but that's just because we're doing you a favor. Like you still owe it. Like that debt's still going to go on the balance, right? Like we're just spending the money. You owe the money and you should thank us for it. It is a privilege that we're going to spend your money for you. You should not even, you're going to pay for it though. Oh, not you really, like your kids, you'll be dead by the time that becomes a problem. Don't worry about it. Okay. Well, that's not a good message. So what's a better message? Peaceful protest, insurrection, COVID, Kardashian, Adele, Buttigieg, like breastfeeding his child. These are better. Biden, racist Trump. Those are the things that get you going. So that first conversation was never had. And of course it wouldn't be had because a reasonable adult could say, wait a second, you're spending my money, but I'm going to owe it. That doesn't make any sense. I'd rather just have it. No. We're going to tell you that your neighbor hates you and that if you go outside, the police are going to shoot you and that those people are to blame. And then we're going to tell them that you're to blame. And we'll just let you guys fight it out while we do this over here. Cool. All right. So now where are we? It's a real cute story, Anthony, but where are we now? The reason I sent the email out this morning is because the music has stopped. Now, what you'll find out, when I say the 500 largest companies on the globe, I'm talking about the S&P 500. The S&P 500 accounts for $13.8 trillion in annual revenue. That is up, I think, 20% from the year before and 20% from the year before. And of course it would. All this new money was printed. All the big companies are keeping it. Everyone's making more money than they ever knew to do it. Small business has just gotten cannibalized by big business. Everything is as good as it could possibly be. For those that know me, know what that sentence means. Everything is as good as it could possibly be for corporate America. You cannot make an argument that it could get any better. Are you going to argue with me that taxes are going to go down, not up? Are you going to argue with me that they have more growth? They've already taken everyone's customers. There is no more such thing as small business. The top 1% of the wealthy own 99% of everything. The disparity is too large. There is no way it can get better for corporate America. Does it sound familiar? Like the housing bubble? When it can't get any better, but everyone's along the whole way has been buying and buying and buying, what happens? Now, the S&P 500 makes up for $13.8 trillion of revenue. Do you know the S&P 500 has only 13.5 million employees? Okay. Each employee makes an average of $72,670 a year. When you do that math, what you quickly find out is that the revenue that comes into these companies is 14 times larger than the salaries. Where's the money going? Well, I'll tell you where the money's going. So the profit, the net profit margin, the profit margin of the S&P 500 is 12%. Its normal is 7%. It just jumped to 12% the last year and a half. Sound familiar? Look at that derivative jump. Can it stay that high forever? Now that you have companies that can't grow any further, how do they get the new growth? All right, maybe they lower some prices here, maybe they lower some prices there, which means the profit margin goes lower. Now, how can they find new growth? What's all the new customers coming in? Can you go ahead and tell me Target's going to grow the same rate next year that they just grew last year? So you're telling me the profit margin is going down and the growth rate's going down. Okay, well, why does that matter? Well, if the revenue is 13.8 trillion, and the profit margin is 12%, that means I wrote it down somewhere. Let's see, whatever, I put it in the email. That means that the actual earnings, the profit earnings of the S&P 500, I think are like 1.3, 1.4 trillion a year. It's a lot of money. But all of that accounts for 1.3 trillion. That's it. Now, why do I say that's it? Because the S&P 500 is an index. That's the 500 biggest companies in the globe, as measured by market capitalization. What's market capitalization? Think of a stock, because they're all stocks. How many stocks, how many shares of stock are out there times what's the price of the stock equals the market capitalization. So if I have 100 shares of Anthony and each share is on $1, the market cap of Anthony is $100. The market capitalization of the S&P 500 is 40.3 trillion. That's roughly 30 times more than the S&P 500 makes. Now, that's called an EPS, earnings per share, right? That's the multiple. That's how many times more these companies are selling for how much that they actually make. Because the multiple is when investors are saying the future is so bright that I'm willing to pay more for this company today because I know it's going to be worth more tomorrow. Okay. Is that the highest discrepancy that we've ever seen? No. There was two higher discrepancies. The crash of 1929, the Great Depression, and the crash of the tech bubble, right? In 2000. Those are the only two times that number was higher. All right, well, it was higher then, Ant, so what's the problem? Okay. It's never been higher than 40.3 trillion, the market cap of those companies. Where is that stock? Where is it? Well, Wall Street buys the companies, they take them public, and then they take the stock and they sell it to investors. Well, how many investors do you think are that stupid? There's not many. Well, there are a lot, but the Wall Street investors, like the hedge funds and the private equity funds, are the smarter of the stupid people, right? So they buy that stuff when it's lower, and then they're just gamblers and they keep trading it, right? That stock is located in your pension fund, in your retirement fund, in your union fund, in state budgets, right? Like so life insurance companies, any entity that has to go ahead and provide a return, like government bonds, municipal bonds, everything is infested with that stock. Everything. That stock has been up God knows how much over the last how many years. Can you tell me that your life is better than it was 2 years ago? No, but the stock market's up like 300% since then. Okay. So what would happen if the stock market were to crash? Now, why hasn't it crashed, right? Because you had a lot of free money. Now, what do you mean by free money, Ant? Like we're new to this. What do you mean by free money? Okay. Government comes out and says, listen, we want to create all these new bills. We're going to go ahead and do a $2 trillion stimulus. We're going to do a $4 trillion COVID package. We're going to build back better, baby. But US doesn't have money. The US owes $30 trillion. Like we have a bond market. A bond is a debt instrument. It's where you sell debt to someone else. You sell someone the ability that you'll pay them back. You're looking for creditors. So the only way we can actually do that stuff is by selling more bonds. Well, what happens when the rest of the world doesn't want to buy our bonds? Because they're like, hey guys, seriously, this is such a joke. We're not doing that. There's a thing called monetary easing, where the government goes to the Treasury and says, hey, listen, you're going to issue these bonds. And the Treasury goes, no one's willing to buy them. And the government goes, no, silly. The Federal Reserve. Remember those people? Yeah, the people we always bail out. Well, guess what? They owe us one. So they're going to print the money and buy the bonds. Okay, that sounds a bit crazy to me, but okay. So now the Federal Reserve goes ahead and prints the money, gives it to the government. The government then goes ahead and does all their stupid nonsense with it. But this time, because the government got caught, they made the mistake. They gave you the money. Everyone knows you don't give you the money. When they gave you the enhanced unemployment and they gave you this stimulus package, they put money into the economy. The increased money supply raised the prices of goods and services. That's called inflation. The rate of inflation has been going so high because all this new money is seeping into the economy that the Federal Reserve has to come out and say, whoa, 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 whoa. I guess we'll go ahead and have to raise rates soon. Actually, you know what? Let's just stop printing as much money as we used to. Okay. So all that new money that's been printed goes into economy and goes into companies, and companies report that as earnings and their stocks go up. All this new money comes into the economy, inflation goes up, goods and services go up, but because these companies operate in US dollars, it doesn't matter how much the dollar inflates. The dollar is still a dollar in the US, therefore companies' earnings go up. Okay, so you're telling me right now that this market's been going up because of free money, now free money stopping. You're telling me right now these companies' earnings are the best they've ever been because they went ahead and bankrupted a whole sector of the economy, a small business, and that doesn't exist anymore. You're telling me these rich people have all this money, but now they have all of it and the 1% have more than the bottom 99% put together? Okay, that sounds really scary. Like, how can that get better? What are you going to colonize Mars? What do you think? Elon Musk is going to Mars because he has a stupid idea? No, he's going there because it can't get any better here. He's going to go build a country over there. Only the suckers get left holding the bag. Who are the suckers? You. It's your pension fund. It's your retirement fund. It's your everything. When this goes haywire, the bond yields go up. It's your mortgage rate. It's all you. You get stuck holding the bag. What do you think? Congress is going to hold the bag? They have more money than they know what to do with. They can make laws. You know what laws they're going to make? Oh, Omicron or whatever stupid COVID variants are out. You need to stay home. Go take a look at what's happening in Australia. Take a look what's happening in Austria. Take a look what's happening in Germany. My question to you is simple. If I'm even 10% right, and that we're going to have the nastiest crash you've ever seen next year, and I don't know when, it could be tomorrow, it could be a month from now, it could be 3 months from now, but I'm listening and I don't hear the music. When that crash happens, what do you think government's going to do? You think they're going to let you go ride in the streets? Do you think they're going to let you march up Capitol Hill? No. You know what the Democrats want more than anything? Mail-in ballots. Democrats love mail-in ballots. They never get to steal elections as much as they can when they do mail-in ballots. And you know what? I'm getting myself in trouble because many people have asked me, Anthony, please don't talk politics. But there are certain realities in the world. And let's say this, right? Let's compromise somewhere. You have a president who has an approval rating under 35. You have a nation who believes that he has no idea what he's doing all day. And you have midterm elections coming up, right? If this crash happens, all of those things put together are very Republican friendly, right? You could go ahead and see people vote Republican, not because Republicans better than Democrat, but because, hey, Dems, you had your chance, you really effed this up, we're going to vote them. If you were the ruling party, and if you didn't want that to happen, and if your constituents are all the urban community, like every low-income demographic and minority, and your constituency is illegal immigrants and all the rest, which actually outnumber the regular people if you take all the lower income plus the illegals. And that probably could have been phrased better, right? But like when only 1% own 99% of the stuff, a lot of people are low income. So when that's your constituency, and all they got to do is like fill out a ballot at home and send it in. Well, that's a pretty good strategy to get reelected. Okay, so let's keep everyone home. All right, we can't use this COVID thing anymore. Seriously, people are getting over that. Well, this market just blew up. Everyone's mortgages are through the roof. Inflation has gotten out of hand, and their retirement and everything just got blown up. They're going to riot in the streets. Oh, let's put them under house arrest for their own protection, because we're the government. Like, people are dumb. You can't go out on the street by yourself. You can't peaceful protest. Look what happened in 2020. Oh, now that's a problem when it's against you. When it's against Republicans, you could blow up cars all over the place. But if it's against Democrats, that's a problem. So now all of a sudden there's no such thing as peaceful protest. So the point of the story is, you could say I'm cuckoo for Cocoa Puffs, and I don't really care. But there is a very, very, very real chance that this goes really bad next year, and this economy will crash. It's all right there. Now, when an economy crashes, what happens? Do you think the world ends? No, but the world ends for a lot of people over the next couple of years. The economy always comes back. A new economy will grow. Something will spur. In fact, the economy that will grow will be something that's very localized, because people are only going to trust the people that they know, or only going to trust the people near them. In fact, they'll likely even do a bit of a barter system. All right, I'll trade you these 3 eggplants for that orange, right? Because we're farming and we don't really have trust in the value of this currency. Like, I don't know what they're doing in Congress. What if I told you we're already doing that? What if I told you that we already have an economy that's at our fingertips right now? What if I told you that the entire Rhino platform is built to go ahead and prepare for that time? What if I told you that the entire Rhino platform is built on the premise that we've already done the investing, we already have the money in our bank account, we're welcoming everyone on. If you have a business, we're putting the business up. If you don't have a business, we're making you a business and putting it up on our marketplace. What if I told you that we're coding out our own search engine algorithm that's going to allow you to search only the companies in our marketplace? And that search engine algorithm is going to be on every website of our marketplace, and everyone's only going to be able to search the ones in the ecosystem, meaning everyone that comes in is going to do the same thing, that everyone within Rhino is constantly going to be able to make sales, because that value proposition is through the roof to begin with. That's all being given to you for free. Plus, you're going to become your own business. Plus, you're going to make sales. Plus, you're going to come into income. And the more people that come in, the higher that goes. What if I were to tell you that instead of having to use a US dollar, Rhino has made their own coin, Rhino coin, that's going to be exclusive to the platform in 2023. That coin is completely dependent and supported on the transactions. Therefore, if transactions are up, coin goes up. Well, how do you get transactions? You have customers, you have businesses. We're making it all for you right now. What if I told you that only 1 billion of those coins exist? What if I told you that that coin was only 1.5 cents today? What if I told you that that coin's going to go up a penny per month until January 2023, where the free market takes over, and everything that we've built between now and then will turn that coin into over $1 million in 2 years? Well, don't take my word for it, right? I have 7 minutes. Let's do a quick share screen. Okay, we're going to go to google.com. We're going to type in our keywords, distributive marketing. And for anyone that doesn't understand it, we are clearly marketing right now by distributing to you. We are giving you stuff to be a part of what we're doing. Okay? All right, this is an ad. They paid for this spot. 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 Look at the first non-paid. Rhino distributive marketing. You know why? Because we get so much traffic. We have such a following. We have so many people a part of what we're doing that even Google says, all right, that's distributive marketing. First page, first results. Now let's go ahead and click that. What I want to bring your attention to, well, first, let's take a look at the marketplace as of now. So last week, there was 5 companies. We just launched 3 weeks ago. We told everyone that these companies were going to start doubling pretty quickly. Here's 10 companies. 10 companies are in the marketplace. Here's their logo. Here's who we are. Here's what their company does. In the next month, we're going to have the search bar right over here. This is all going to be gone. Each company is going to have 100 keywords that we're going to create for the company, meaning in this search bar, because we're going to have thousands of companies, anyone's going to be able to come to this page. I'm looking for apple pie. The search engine will pop up. Did you mean Ann's Apple Pie Shop? And that person's company is going to come up. They'll be able to click it. Let's click Don Sturgill. Their site will come up. You'll be able to click the website and go right to it, right? And this is Don, who's really one of our favorite people. And I'm actually really pleased that I see his website's up today. And you'll be able to go on the site, patronize, be a customer, and say, you know what? This is one of the good guys. He's with us. This is who we are. Now, on top of that coin that I just spoke about, which should be in everyone's interest, is being given to everyone on the platform. Everyone on the platform gets 50 coin per month, gets an additional 10 coin for every referral you bring. Because here's the key. We cannot go ahead and create this economy, this ecosystem, and only be the ones to prosper from it. I'm not the owner of it. I'm simply the leader of it. So if everyone has the coin and everyone's on the platform and everyone buys from everyone else and we continue to grow, what does that coin look like? I have 4 minutes left, guys. Rhino coin. For the first time ever, no one has ever put a balance sheet of the entire coin on their page. This balance sheet is basically the balance sheet of our entire company. This is the weeks. Yellow is the weeks that we've passed. Green is the week that we're on. This green is January 2023 when the coin becomes a free floating coin. These are the weeks. This is the high daily views of the week. This is how many people have registered for the calls that we're on right now. This is the total number of people that are on the platform, which actually this growth rate is not 15. It's proven to be 17. We are growing faster than even we projected. Businesses, again, we hired a whole team for this, so it stayed stagnant. And look, day 1, 6 to 10. Actually, this was 5. And as you'll notice, I can edit this sheet. You can't edit it, but you have complete access to it in view only. In fact, you have access to actually leave comments on it, which means every time that we edit in anything in real time, you have all the numbers like that. This is the amount of transactions we've done. We've projected 0, we've done 0. We're projecting our first transactions next week because next week we're going to start highlighting and interviewing the business owners of Rhino. They're going to be the ones that are going to be taking over these meetings. What's the transactional volume? How much coin is owned by the members? How much coin has been bought by the investors? We projected that $20 per week per member. It's only $15.15, which is good. Let's see, the growth rate is higher. We want to make sure that there's still coin available for everyone else. What is the literal value of the coin? What's the demand ratio of the coin? What's the growth rate? And what's the price of the coin? Now, we're going to do a little bit of a magic trick. I only have 2 minutes left. Let me show it to you. This is what I was talking about with Looney Tune numbers. Anyone on this platform knows this number was like 40,000 yesterday. It's now 1.4 million. The difference is this. This growth rate we projected to be 15%. It's now 17%. 17% compounded on the week before it. Look, 185. Well, this is actually 30%, right? Our growth rate, no. Yeah, so our growth rate is actually 17%, and it's being valued as a webinar registrants. This right here is close to, no, okay, sorry, I'm losing my mind. This is 17%, it was only 15%, which means every week thereafter is compounding 17%. When you compound 17 that many weeks in a row, your numbers get larger. Look how large they're getting. This is the members on the platform, members on the platform. Well, Ian, how you get that many members on the platform? Well, you gotta remember, we have paid advertising, we have email lists, we have affiliate marketing, and we didn't even get to our awareness campaigns where we do media events and all the rest and big events. This is happening. But let me show you a magic trick, right? 1.4 million is the new projected value for January 2024. Everyone see that? 1.4 million, 1.4 million, 1.4 million. Now let's go over here. See this number 373? That's the projection for how many members are going to be on the platform next week. Let's say everyone leaves, it only goes down to 100. Watch these numbers. You ready? They all changed. You know why? Because every number is calculated on the number before it. This is a living, breathing forecast of projections that everyone could see. Every time a number is put in, you're going to know exactly what the projection of the coin is going to be. What does this become worth? 102,000. It was just 1.4 million. What if this goes down to 20? The coin's now worth 4,000. Point being, our membership numbers are so uber important. How do we get this number, right? What is this number even calculated as? Weekly transactional volume divided by total Rhino coin supply of 1 billion, then multiplied by the projected demand ratio of the Rhino Coin monthly member disbursement trend, plus Rhino Coin weekly purchase trend divided by total supply, then multiplied by the 3-month growth rate and weekly transactional volume. Sounds like a lot coming out of your mouth, right? Look, it's all right here. All these projections are all these numbers which are calculated against all these numbers which are calculated against all these numbers which are calculated all these numbers. Yeah, that number seems high. How about this? There's only a billion coin. Shiba coin has 549 trillion, right? So like, let's put things in perspective. Shiba coin has, I don't know, like 2 trillion. Put things in perspective. This is 1 billion. That's it. 1 billion for doing what? Creating an entire economy. It's not like we're sitting here saying, okay, this is a coin that's a protocol that if you put this in the machine, you'll get a banana and you're able to pat your head and rub your belly at the same time. No, we're actually creating an economy here. And we're preparing because we know what's coming. So if our numbers hold up and what we believe holds up, and every single day you could see the numbers and see it in real time, then the people that get involved and have the vision to see are going to change their lives forever. January 2023, when this coin becomes a free floating currency, it's projected to be 76 cents. It's now 1.5 cents. It's 9:01. Give me till 9:05. Let me just show you how to get the coin if you want it. Actually, let's take a look at the ledger because along the lines of all the transparency, you want to see who owns the coin? This is everyone that owns the coin right now. You think you're the only one? You think you're going to be the only one? Nope. All the new people. It's only the 6th of the month. 67 million coins owned right now. Okay. And again, you could click both of these. That's how transparent this is. I'm going to go ahead and copy this link into the chat. I need everyone to stay with me here. Everyone click that, please. I'm going to take a sip of water. Stay with me. Click that right now, please. Got 3 minutes left. Okay. Oh, stay where you are. Let me show you something. Yeah, you could buy the coin. Can you sell it too? Yes. All right. My name is Anthony. My last name is Calashone. My email is anthonycalashone@rhinoresearchllc.com. I want to sell. Now, like I said, the coin goes up 1 cent every month for the entire year of 2022. It's a managed market that we're going to guarantee. All right, I want to sell the coin in June at 7 cents because June's my birthday. I want to sell 100,000 of it. Okay, I'm requesting to sell Rhino. I read the terms and conditions, right? Everyone reads it. Make sure you read it. I'm not a robot. I know I sound like one. Submit. Cool. Now what happens is I collect that email. I go ahead and put your sell order in for June. And when we get to it, we sell your coin for you. Because if you think in June, someone's not going to want to buy your coin at 7 cents, cuckoo for Cocoa Puffs. They're going to want to buy that hand over. You're probably going to call me and say, Ant, please don't sell it. And these are all videos, right? Like you could watch the video on the coin and learn a little more. All right, here we are. I'm going to do it one more time. Click it, guys. Let's go. Get the Rhino coin. Now, you can very clearly see what the value of the coin is for next year. January, 2 cents. February, 3 cents. March, 4 cents, right? You're able to buy the coin in $100 blocks. It makes it nice and easy. 100's a round number. I suggest starting with 1,000. 10 quantity times $100 equals 1,000 purchase. And let me say something. I say that because I know what the coin's going to be worth. And I know that we're all quite greedy, that when the coin gets to where it is, you're going to say to me, Aunt, God, I wish I was able to buy more. Why didn't I do it? Because you're greedy. We're all greedy. We're going to want it. And you're going to say, if I had a time machine and I was able to go back in time, I would do it. Here's your time machine. All right, this says 20 because I bought 10 yesterday. Well, I didn't buy it. I showed it. So I just changed it 10, which is what yours should say right now. 10 times 100 equals 1,000. Look, subtotal 1,000. If I could take your attention for a moment, direct it to SSL Secure Shopping. Your data is safe and secure. This is the most secure accreditation you could have on the internet. If you don't see it, don't buy it from someone. If you do see it, do buy it. I'm speaking biasly, but I also got to pick it. Therefore, that makes sense. Check out. Here's the checkout. This is my email. This is my first name, last name. You don't need to know my address. Here's my city. Here's my country. Here's my state. Here's my zip code. Here's my phone number. It's not the correct phone number because I don't want everyone calling me. But some of you actually do have my number because I'm friends with a lot of people on this. Continue. Free shipping, because we're going to email you the invoice, exactly the transaction you make. On top of that, Tony, on top of that, at the end of the month, you're going to receive your certificates. Yeah, Derek, I will contact you. I just can't answer every one of your questions in the chat because then I'm already running late. But Derek, I will contact you, I promise. In fact, let's set up a call for tomorrow. Let's see. Okay, Derek, schedule page link. Oh, come on. Everyone stay with me, stay with me, stay with me. All right. Where's my schedule page? Meet with Anthony. Okay, copy. Everyone, how many coins for $100 or 1,000? So the value of the coin is 1.5 cents, 0.015. So you will do that division yourself. $100 is 6,666 coin and 67. 1,000 is 66,667. Okay. This is for Derek. I'm going to put it to Derek, but I also put it for everyone. That's my schedule link. If you need me, if you want to talk more, go ahead. No problem. I'm there for everyone. Okay. Also, once you go ahead and do this shipping, you'll receive the certificate at the end of the month, like everyone else. This is your proof of ownership, your name, the amount of coin you own. My pleasure, Derek. My signature, company seal, fully certified, authorized, and the price of the coin so you know exactly what you own. Continue. Your payment information, continue. Bada bing, bada boom, you're done. I must tell you, come January, it goes to 2 cents. Come February, it comes to 3 cents. You could always buy, you could always sell, but you will never get the price of 1.5 cents ever again. And I got to tell you something. So I don't mean to play the scarcity game like so many people do, but there's only 1 billion coin. And what I've come to find out today is that we're going to reach 1 billion by week 53, as per projections, which means by week 60, which is January 2023, there's not going to be any coin left. Now, we hold 50 million in reserve, but that coin is only going to go to the new members of the platform. It's not going to go to investors to buy it. In fact, you're going to have to go ahead and buy and sell through our marketplace. But our marketplace is a fixed price, which means you're going to have to hold it till January. And that price in January is going to probably be in the dollars. So I don't mean to, listen, I gave you my background. I know markets, I know finance. If you could understand what I'm about to say, I'm going to remove myself from being the leader of this. Now, mind you, the coin that you purchase comes directly to Rhino. That coin is put back into the company to grow the company, to support the value of the coin by bringing on more members and increasing the transactions, which you could so clearly see right here, right? So in a really, really quite interesting way, this is the first time in history where the population actually in control of their destiny, because the population, if we all agree to buy from each other and buy with our currency and create our economy, because that one's going to blow up, before it blows up, we will literally be able to recreate our future to a point that we're the 1%. It's 1.5 cents, guys. 1.5 cents. And you know what? I'm going to leave you off with one last thing. This calculation is only 10% of what the number truly is. What do I mean by that? Take a look. Everything in here times 0.1, which means these numbers only reflect 10% of what this number possibly could be, which means I have to be 90% wrong for this number to be 1.4 million. That's the power of what we're doing. So I'm going to go because it's 9:10, and I'm not doing it because I don't want to talk to you, or not because I can't go for another hour, but because out of respect for people on the platform, I don't want people missing more than they already could, because people are all over the globe. Guys, I love you. I will see you tomorrow. Bye.